So I thought most interesting tonight, we'll start off with what's going on here right now. Like, let's have a State of the Union update. Perhaps you can say to us, what's happening right now, and then we'll get into future.
Sure. Yeah, it's been an interesting, let's say, since the spring, we've been on sort of a downward trajectory. We've seen, the market softening progressively. The pricing is on a little bit of a downward trend. We're losing about 2% a month in value on average. A little more for single family, a little less on the less expensive property types, just because people are being compressed into the lower price point stuff. But all of this is affordability driven, right? And so we've seen sales decline. We don't have a pile of inventory, mainly because a lot of people are somewhat trapped with their interest rate. They don't want to sell and then go and repurchase at the new rates. So you see a lot of people holding off, putting their home on the market. You also see a lot of people holding off purchasing, which means what I see, the consequence of that is there'll be some pent-up demand. Mm-hmm. And so when the interest rates do come back down, and all signs point to next year, I think you're going to see a bit of a flurry.
Yeah, and it was interesting today, the Federal Reserve came out and basically told the market and everybody else that we're at the peak of rates here, and that consensus right now is perhaps 3 cuts next year in the United States, and in Canada, probably 4 cuts. So 0.25 per cut. So you are going to see relief in terms of rate cuts, and that will be certainly welcome here for everybody in the real estate market. It's also helpful for what we do here. Every time you raise interest rates, you are tamping down the real estate market, and you're tamping down the stock market. You're doing this on purpose, in order to facilitate a reduction in inflation. And the Bank of Canada and the Federal Reserve, as inept as they are, have actually done a pretty good job of doing this. We've seen inflation come down from almost 10% to the low 3s right now. Their goal is still to get to that 2% number. We'll see if they're successful at doing that. They're going to let the market kind of marinate here, we'll say, for another 4 months. And then I suspect probably in April, that's consensus right now, you'll start to see the Bank of Canada cut rates. The Fed's a little different in the sense that their economy is way stronger than ours here in Canada. Canada has more debt per capita, and it's kind of a function about real estate and how we can put more money into our principal residence here. And that whole tax exemption, when you sell your principal residence, there's no income tax payable. So people tend to load up a little bit more on their principal residence. And so that's what you're seeing right now, and I think it dovetails with what AJ is saying in terms of not much inventory right now, but things should loosen up as we go along here.
Yeah, and really the biggest issue we have now is sales volume. It's not that many listings. There's only a couple thousand listings, which is kind of right on par with a 5-year average. What we have is really low sales. We're seeing about 250 sales a month. Contrast that to a great month, say in 2021, would be like 1,000 sales. So you're seeing a lot less just activity happening. And so I think a lot of people's wealth is trapped in their homes, and there's sort of this question as to whether or not that's really accessible if they put it on the market, and would it be wise to do it, right? And so depending on where you're at, if you're downsizing, there's opportunity. If you're upsizing, there's opportunity, depending on how you play it, right?
Maybe we should just chat a bit about what type of opportunity you do see here. As we go forward, you're going to start to see rates compress. Where are you seeing value? Are you seeing it more on, single homes? Are we seeing it more in condos? This is Okanagan specific. It's not necessarily, BC or Canada specific, but where do you see value or opportunity right now?
Yeah, I see. That's kind of, if I have a superpower, it's in sort of figuring out where the value lies, and I think there's a few different spots where it can exist. Number one, right now, builders who have built stuff on spec that have been they've attempted now for maybe 3, 4, 6 months to sell this property. I'm one of them, by the way. I speak from experience. I have a number of homes that I built on spec. They're sitting there. I am a perfect target for a lowball offer. So if there was a person that wanted to take advantage of a builder,
talk to him tonight.
Yeah.
A couple glasses of wine.
But I have the fortunate space. I can come at this from different angles, right? I mean, I do resale real estate. We also manage about $1 billion worth of rental property. We do the development side of things. We build homes, right? And we have the investment portfolio. So depending on where the conversation goes, we can kind of talk about it. But the latent value that I see right now is I think there's a lot of price discovery to happen with commercial assets, multifamily particularly. There is a lot of at the time, let's say go back 2 years ago, these properties were trading at, large multiples because cap rates were quite low because there was a lot of capital chasing that. Now that interest rates are high, there isn't that much capital looking for these assets. So if you owned a multifamily property and you had to sell it right now, you would have to sell it based on today's interest rates. And so I think there's a window of time before rates come back down where the bank will do the negotiating for you because they're going to dictate to you what you can purchase it at based on the spread that you need on today's interest rates, if that makes sense. So there's a lot of opportunity, I think, in multifamily. I think there's a bit of price discovery that we'll see now. They've just blanket changed the zoning that allows for 4plexes and 6plexes in many cases. I don't think that that's been priced into the market yet. So if you can find a house that's within 400 meters of a bus stop, somewhere downtown, that's still in that sort of $600,000 to $800,000 range, there's a lot of opportunity in that. I think there's going to be opportunity right now. They just changed the rules on us for short-term rentals.
Airbnb.
So you've got a number of people, let's say if you bought a condo at a premium, let's say at Brooklyn in that tower, predicated on the idea that you could do short-term rentals.
Yep.
Now, all of a sudden you can't. Well, these properties are going to come on the market in droves. So that is going to create an oversupply in one particular market segment. So condos that previously were Airbnbs that are not, there's an opportunity there.
And for the record, I am one of those people. So I presently have a 2-bedroom condo in Yaletown for sale, if anybody's interested. I think there's 465 units for sale and 4 sold last month. So, there is inventory now. There's just not a lot of sales. It's very light for realtors right now in terms of, doing a lot of business. So it will unthaw here. We actually took it off the market with the idea we'll turn around and relist here as we start to see the unthawing of interest rates here. In Canada, April is kind of what we're targeting right now, so we'll see what that looks like, but we're hoping to relist it at that point.
Yeah, it's interesting. I think the whole purpose of mandating Airbnbs or trying to basically eliminate Airbnbs was to try to create affordable rental stock. And the thinking was there's maybe 30,000 units that would come available once they put these rules in place. But the people who bought them paid such a premium, and the rates that they're paying in terms of their interest rates today are so high that they're not going to turn this into a rental property. And furthermore, there's also another thing that probably people don't realize is when you change the use of a property from commercial use now to residential use, you are actually now required to self-assess for GST. Now, a lot of people, when they bought these units, they deferred paying GST on them. So let's say it's $1 million unit. If you, just by converting it into now a negative cash flow situation, in addition to the fact that that's a shitty proposition, you now have to self-assess for GST and pay an extra $50,000 or $100,000. I don't think anyone's going to do that. They'll put the home on the market and it'll go to someone.
Then we have inventory.
But not enough, I don't think, to move the needle a ton macro. But for a window, sort of between now and April, I think there is going to be a buying opportunity in that.
There's certain bylaws, I know in Vancouver, for instance, they're pretty tight with the rental market, like the Airbnb market.
Yep.
So I don't think it's all of a sudden it's going to destroy the market, but there is going to be a lot more inventory.
Totally. And the flip side of the coin is if you're in a building that is grandfathered in, let's say, for example, in Kelowna would be like Discovery Bay or maybe Playa del Sol. It looks to me like those are going to be fine. Those values are going to be increased because they're going to become the rare jewel. Quick story, I have a property that I'm doing a deal on right now that's on Trustwell, which has been a hotel for a very long time. And our client has had an offer on it. It's been a long ongoing negotiation. In any case, the price we had agreed to pay for it 2 years ago, or a year and a half ago, seemed quite high. But now that this rule change has happened, because it has hotel zoning, now it's a steal. And so it was like on a dime. There's a big shift. If you have the zoning that will allow for this, there's a pretty big windfall there for you.
One thing you should know about AJ, he is a very good deal maker. He's very opportunistic. He's very talented at spotting these opportunities. In fact, just to pump his tires for a sec, he just sold a pretty large house here the other day. Why don't you just chat about that for a sec?
Oh, yeah. Well,
largest in Kelowna history, I believe.
Yeah, there's not too much I can disclose on that, but it was a really fun deal to do. It required us to dust off a few tools in the tool belt. We had to do a vendor take-back mortgage, which, in order to get a property of 13 plus million sold. You have to get a little creative on the financing end. So we were able to do a vendor take-back mortgage, which ended up being a great investment for our sellers. So they got a nice chunk of cash. They got to move on with their life. They have a nice revenue stream now for the next couple of years. And it made it possible for our buyer to move into that house without selling his property. Now he's got a couple of years to sell his property and move into it. So it was a win-win scenario, but it was nice to be able to do something creative. It took us 6 months to pull it all together, though.
Yeah, it's been a deal you've been working on for a while, so congratulations.
Thanks.
AJ, what happens to these high-rise buildings that are pre-selling and they're getting these crazy $1,200, $1,300, $1,400 a square foot in Kelowna now, and they're sold at something, but now the market's doing this. Do those people, like, what happens there? The market's going to go down, like, do you think?
It's hard to answer that with any certainty. I can say that right now we have the widest disparity between what the pre-sale market was selling for, whether that's $1,100, $1,200 a foot, like you say, and where the resale market is in the same area. So if you take, say, South Pandosy Village, for example, you might be buying something pre-con for $1,100, $1,200 a foot, whereas the resale market's at $800. That gap is the largest it's ever been. It's a 25-30% gap. And condos in the last 3 months, just in the resale market, have come down 10%. So there could be some short-term pain in that space.
Will these builders, will they just keep those buildings empty till eventually it comes back? And, like,
Well, they're pre-sold.
Did we see that in Vancouver especially?
They're pre-sold, but the closest approximation I can make is what happened with Waterscapes, the Letting and McAllister building that sold in 2007. And I sold about 18 units in that building, and then I bought 2 of them, so I was feeling the pain myself. In any case, by the time we went to close on it, we were underwater by about 15%. We had 10% deposits at the time, so we were negative. Anyways, we had to close on them because that's just the situation. You're forced to close on them. Some people did walk away. The ones that did, I think they're still on the hook at the end of the day, and whether the developer chooses to pursue that or not, that's up to them. What happened was they ended up getting back about 40% of their inventory, and it took them 10 years to sell it out. So I think a lot of what's happening is going to take the better part of a decade to really work its way through the system. So we're going to see kind of a funky market. There's going to be highs and lows, but we're going to see a lot of the stuff that's happening right now, even the stuff they're doing with zoning and all of that, that's not necessarily going to hit right away. That's going to take 10 years to play out.
That's a good question, because there's probably, 14 working cranes in Kelowna?
I was someday we should pick up a condo or something.
Yeah.
But we started this years ago, and I remember Waterscapes. We went
Yeah.
up, I think it was Waterscapes, we went up and looked at a penthouse that was selling for $750, $800.
Yeah, yeah.
And I was like, wow, that's too much. And we thought it was beautiful. It had 3 sides, and
Yeah.
we're thinking, this is gorgeous, and big 12-foot ceilings, and we walked around until we got to the north deck, and then it was full of sawdust and noise from the mill and everything. I thought, no way, this is the last time we'll ever go there. Well, I looked stupid 2 years ago. We was probably selling for $2 million.
Yep. Well, a lot of the
I'm guessing that kind of same thing's going to happen with water by the park. All these places that are pre-sold, they almost had a bidding war.
Yep.
What are you going to pay? That's what they determine the initial price.
Yeah, the ones that are pre-sold from a getting built standpoint, they're going to get built. A lot of the projects are just not going to get built. They've gone to market, and construction costs have continued to balloon. Now your lending costs have gone up. They don't pencil. So the developer's going to run out the shot clock and just return deposits. That's what's likely going to happen on a lot of projects. The ones that have met their pre-sale requirements or have sold enough where the developer feels like they have enough equity and they're comfortable moving forward, they'll still be built and they'll be absorbed. There will be people, however, that won't be able to get them financed at the end of the road, and that's where the opportunity comes in. They might be willing to walk away. Most of these projects have 20% deposits now because the Letting and McAllister fiasco with 10%, developers aren't looking to repeat that, so now they have more skin. So that there is quite a bit of a slack adjuster there, so if people want to relieve some of these buyers from their obligations, there should be discounts to be had. That would be my best guess.
Start shopping. Any other questions? That was a great question, by the way. Tom?
So
Yeah.
Can you talk about that?
Yeah, this one's really interesting to me because, I do land assemblies and we've taken properties and, gone through the rezoning process, and it takes time, it takes money, it takes expertise, it takes a lot of things. And as a consequence, that limits the supply of development land because it takes a lot to get a parcel to the degree where it's ready to be built on. And that's always been done at the municipal level, right? And municipalities have different, and they have 4-year election cycles. And right now we have a council that's not pro much other than just following their OCP guidelines. So now that decision-making has been taken away from them. The province has said there is no such thing as single-family zoning anymore. And so properties that are over, I think it's 3,000 feet, so the 30 by 100 lot, which is a very small postcard lot, now has to allow for a fourplex. And so you've got properties that are within a certain distance, I think it's 400 meters to a bus stop. Now they have to allow for a sixplex. And that is an automatic zoning. So you don't have to go through this 4-6 month rigmarole with the city in order to get that. So on one hand, this could bring some units to the marketplace, which is what the intent is. But then the other part of me says, okay, well, projects don't pencil now. If everybody thinks all of a sudden their land is going to get more expensive because of this, it's not going to help. Like we need lower construction costs, which I don't see our plumbers and our electricians suddenly doing this for less money, right? And so I think really the only way out of that is technology. We need technology like new materials. We need new ways of building properties that can get stuff built faster and for less money to get prices on the construction side to come down, because even a property, let's say you assembled 5 properties together that were now good for 10 stories. Even if it was free, the land was free, which I can assure you it won't be, it would still be very hard to get this project to pencil out, to get it to be bankable, to get lenders to play ball, all those things, and to be able to find some sort of way to make a return on your investment. It's very hard. And so I don't know that we're going to suddenly see, just because they've changed the zoning on a bunch of properties, a whole bunch of new developments. And for the last 18 months, we've seen what developers are willing to pay for development property go down incrementally on a price per square foot basis. People were paying $100 per buildable foot, and then it was 85, and now it's closer to 65 or even lower. So that's been going down incrementally over the last 18 months, and less developers are in the game, and more development land is suddenly available. So that's not necessarily indicative of big price increases. I think a lot of people think they're sitting on gold mines with this. I think short term, that's not going to be the case. But there are certain pockets, little properties like in Rutland, for example, that might be right in the epicenter of this new transit hub, where suddenly they're good for 10 stories. That, I think there's definitely some upside in that land.
What do you think the fires implication? So obviously we had a bunch of houses burned down from the fires. Does that just impact all these trades, and it's even harder to get trades now? And
yeah, it's not like 03 when we lost, I think it was 160 or 170 structures. It wasn't quite that much this year, but there's definitely always a bit of a boon for trades. But I'm seeing, I don't have any data on this, but anecdotally I'm seeing more and more, because we have a construction company, I'm having trades call me and ask me if we have work. And I haven't had that conversation in many years. So I know that.
AJ, you've hit a huge area, which is that, you just talked about that there's a need for a fundamental different change in how you do residential construction.
Correct.
And people have looked at this panelized housing systems and other things for a while. And you're seeing it in commercial already. You see commercial buildings go up pretty fast, or you see, hotels get built with drop-in modular construction. So do you think that's an area that's ripe for change? And have you seen anything that rocks your world in terms of how we build homes, higher performance, lower cost, more energy efficient homes, or is that just still a dream?
It's tough because the BC building code is so stringent and so hard to hit those mandates. But one of the things that I think shows the most promise is the 3D printing. We were involved in a non-for-profit called New Story that was doing them in third world countries and building them. You could build a house for $10K US in 24 hours.
Wow.
So that was pretty impressive. Now that required a little bit of government subsidy in order to achieve those numbers, but the 24 hours to build out the house was pretty impressive. And that was like building in the furniture, everything. So everything was printed. So like you had a bed, it was neat. Yeah. So I think obviously these are pretty rudimentary homes in comparison to what we build here. And in third world places where the climate's a little different, you don't have to have quite as much, like even here you can't even have, you can't have a zero edge, like in California, how you can open your doors up. Now, here because we have snow, all those things. So 3D printing has a long way to go before it's going to be able to accommodate, all the different building code stuff that we've got here.
And it's a good question from the CEO of a sustainable company. I hope you are. We are too.
Can we go back to the provincial legislation that Tom raised? Okay, so it's getting implemented inside the permanent growth boundary for Kelowna, so it's
Yeah.
not all houses,
Yeah.
include like this property.
Yeah.
But it has to be implemented by 2025.
Yep.
So we've got we can crawl into this over the next 2 years.
Yep.
So using your crystal ball, which I know you have, I haven't seen it yet, but you're going to show us now. What does that do for the market in more like a 2025, 2027 long-term real estate market, like supply, demand? What do you think? Is that going to help the supply, or are we?
I've been thinking about this a lot. One of the things that kind of comes to mind is because the land assessments on our BC assessments, there's the land and there's the structure. Well, the land is always based on highest and best use. So with this now blanket zoning, there's going to be a lot of people who are going to get a land lift, but they're also going to get a tax bill associated with that lift, and they're not going to be able to afford that tax bill. So they're going to cash in. It's going to almost force the sale for many, and so I think that brings in a lot of supply. So unless we can figure out a way to get projects to pencil and have developers who are actually excited to take some of these projects on, then you're just going to have an oversupply of these properties. So that's one of the things that came to mind. As I haven't been able to really model this out. I don't even know how you would, to be fair. But yeah, I think there's short-term opportunity right now because I just don't think the price discovery has happened. And then there's also being aware that there's going to be a number of these properties coming when everyone gets their 25 assessments.
Good question, Kevin. Thank you.
Yeah, that's really good.
Maybe just comment a bit about demographics. In our business, Brandon and I see a lot of demographic shifts here where we're seeing a lot of interest for clients trying to facilitate a transition of wealth from one generation to the next. With the current government in place, there's a lot of taxation to pay. People are always trying to figure out a way to pay less taxes. Maybe you can just comment on how you're seeing a demographic shift from people perhaps in these larger mansions or larger homes that are starting to downsize and what that looks like, and maybe comment on that.
Yeah, well, I mean, when you look at the market, it's a food chain, if you will. So you have to have a robust first-time home buyer market to unlock that executive level home, to unlock the luxury sector. Luxury sector, I should say, is actually a little bit insulated from it because as long as you're attractive enough, people are coming from all over with. But certainly up until that sort of ultra luxury, that's very much a food chain. We are losing our youth to Alberta right now. Just like it happened when I got out of high school back in 2000, we saw there was a whole brain drain at that point. Then right after the 2008 crisis, we saw a brain drain after that. And we're seeing it again now. So I'm noticing people who are cashing out of their houses here, or people who never even got into real estate here because it just became more and more out of reach, moving to Cochrane, Alberta. Or they're moving to some place in Edson or St. Albert, something like that, where they can buy a nice house for $420K. We're not going to come back to a place like that in Kelowna. So we have to find a way to get people into that first-time home buyer. So we've often consulted baby boomer clients on how to move some of their capital and allow their whether it's a millennial or Gen Z, to get them in the game, right? And so there's ways you can do it where it doesn't have to be a gift, right? It can be a loan.
Yep.
And that end user can afford to pay more because they're going to get to skip CMHC now, right? They can go to a 30-year amortization on their mortgage. They don't have to pay the CMHC premiums. So they can actually afford to give mom and dad or grandparents a little bit return premium on the down payment that they pulled out by way of a HELOC or something like that, right? So there's ways to facilitate it where it's win-win. It doesn't have to be a gift. It can be a short-term, 2 to 5 year program to get them in. and to make it win-win.
And maybe one more comment on that. We get marketed all the time, the whole chip mortgages, reverse mortgages. You know, we get clients asking us all the time, is this a good deal? Should I do this? You know, and we have these conversations all the time. So I'd be interested to get your perspective on those programs.
Yeah, I think the historic chip mortgage has been sort of a predatory product.
Agreed.
I'm actually trying to create, we do all kinds of creative programs at our firm. I'm trying to create something, it's called the sell and stay, where you actually sell the property, but you don't have to move out. You stay in, remain in as a tenant, and then you have an option to buy it back at that price or at a small premium anytime over the next 5 years if you had seller's remorse or something. But if you want to access your capital and transfer title. But yeah, I don't know. Chip mortgages are interesting. I think like anything, if you
The right
use
situation.
the right situation,
Yeah.
and if you use the capital correctly, it could work for you. But
Yeah.
I think on the whole, I think there's a lot of people that regret their choice to do that.
Yeah, it gets targeted, marketed to a lot of
Yeah.
elderly and people that perhaps have the assets to do something else, more creative, and they get kind of pushed into that direction.
But I think about it from my own mother's perspective, right? She's got her house paid off, and and I think in her mind she really wants to bequeath it to my brother and I, and in my mind I'm like, no, we don't need that. Why not take all of that equity and just burn it down, enjoy every
Yeah.
last bit of it, I have fun with it right to the end. Like I don't want.
Son of the year here.
I don't know, but I don't. Yeah, I'm not looking for that. But yeah, I don't know. I would, if my mom was ever looking at that, and if suddenly that was unlocked, the lifestyle that she wanted,
Then go for it.
go for it.
I think it was great. Is anyone else, no other questions? We're good?
And that was a good.
Yeah, good job.
Good. Thanks, guys.
Thank you, everyone.